Hello, this is the price action for yesterday, the EURUSD 3-minute chart. We had a spike and broad bear channel with a range in there. So let's go up to the 15-minute chart to see how this formed. So yesterday, we're still in this orange channel here, and we finally broke out of there, and we're expecting this to fail. It's breaking at the top, overshooting the top of the channel, and expecting those two legs back. And it fails quite strongly, and we end up getting an overshoot. And once you get this sort of overshoot, you're looking for some sort of trading range or even a reversal, and we got the reversal. It was really strong reversal. It looked really strong on the 3-minute chart, just skyrocketed up. So on the 15 minutes, gone right above the EMA, then failed, headed all the way down, and then we've had this trading range sideways to down back to the EMA. So let's go into the 3-minute chart to see the trades for the night. So last night you would have been watching, and of course you've seen the overshoot happen. So you can't go short here. You draw your range from the area where it overshooted down to the lows. And on this second entry short, it fails. So you can go long here if you decide to go long here, expecting things to go up. Because it's so strong of a failure, like this bar is so bullish, the bullish bar, failure, and bullish momentum. Once you start seeing this break above the EMA, it's not a bad idea to go long and just hold. And you can hold all the way to the first pullback, or if it overshoots, or if there's a big bearish bar exit. But just keep holding. You can enter in here on this pause bar. If you've missed out, you can see all the gaps happening. And you can even enter on this doji bar if you're thinking we're probably going to channel here. You can take another scalp up to the highs only. But once you get this second attempt down, the bears have more control now, and it's better to not look to go long anymore, but look to go short and get back with the actual trend. So these second entries and these failed double tops, they mean something, and you got to look out for them and understand that we may be going down now. We get four bearish bars closing on their lows. So we're expecting this first attempt up to fail, and maybe we get a measured move back down, and this is exactly what happens. So once that fails, you can go short there, and we head for that measured leg. You may want to exit after the overshoot there. So once you get this big bearish bar there, and you see that overshoot, you're expecting some sort of trading range to form. You may exit there, and you want to draw your range in as quickly as you can, so you get your small range in there. You also want to look for the bigger channel. So now I've got that second leg. Maybe this is the start of a downward trend again. So get your channel in there, highs to the lows, so you can see what is happening. We then head back to the EMA. You get this second entry short at the EMA. This is harder to enter in. It's an engulfing bar. It takes up the whole blue range. It's very hard to get into that trade unless you drop your order in here. But you want to see that tick back. You don't want not too much of these matching highs. You rather see that tick back up and then enter lower on that, and put your limit order in and hopefully get filled and taking your scalp there. Anyway, we overshoot again, and then we start creating dojis and things. And because we've gone sideways now for so many bars, like you may be thinking we're definitely in a trading range, so you should be thinking to draw your trading range on there. But you shouldn't be really looking to enter until you get up to the highs or lows. So this sort of you just gotta wait. So once you see price action going sideways for this long, if you're quick and you can get your channels on there, you'll understand what's going on. If you don't have your channels on there, you may be thinking to go short here, but it's very dangerous to go short here, just because of all the sideways bars and the channel line being here. So you got your lows here. You got to have your line on there to know that you can't go short here. And then all of a sudden you're heading back up again. You break out of here. We're expecting this to fail. It doesn't fail. It holds and pushes up for one more push above. And then we hit on our channel line here. So this is a good short entry. We've broken out of a channel high, and it's given us another second entry down. So we can take that trade and we can ride it all the way down to the bottom of the range. So we're looking at the lows here. And then after you overshoot here, you will want to exit. So you've overshot this micro channel line. And then we head on up again, and we create this channel, and we have a break of the channel, and then we push out and we try to break out of this yellow down channel, and we fail again. So you can go short here and just hold, and that's how you play it. It's quite hard to do, but once you can draw in your channels quickly, and you understand and you get your range on. So the way I play this, I just want to show you so you can see how I play, how I look at this. So first I'm playing the micro channel. So I took my trade, I took that trade there, and I also took this trade. Once it failed, I held, I exited. Once we overshot, I then drew my range in there. And after I finished drawing my range and I could see it, I'm just waiting for it to come back to the EMA. This trade is a bit more risky because of the engulfing, but it may get you, and you may enter on that because you are thinking you're probably still going to go a little bit lower. But if you get on your channel quickly, so you can see like on these lows, and you can see the bigger channel. So you put it on the swing there, and on the start of the spike, or not the start of the spike, the start of the first pullback. Basically, the spike is outside of this channel, and then you get the lows on there. You automatically know that you can only take a scalp here. You've got to be quick to be able to put your channel on. You don't wait for multiple presses to put your channel on. You put your channel on the swing and on the low as quickly as you can. So once you get that lower high there, try to fit your bigger channel on there. And I actually wait till the trading range forms. So once this blue range is on there, which you should get on pretty much instantly, it's very easy to get on. Once you see those lows, you just pull the range down there, and then you know where your lows are. And then by that time, you should be thinking, oh, there's probably a bigger channel in play, and you should try and get your channel on there because you've had a strong move down. There's like a spike form there. Also, looking up at the 15-minute chart, you can see it more clearly. You'll start to see, oh, bear bar, bull bar, bear bar. Oh, I've got to get this channel on there. So you'll end up getting your channel on there, and you are expecting sideways to down because of how bearish this is. So that's how you do it. You just got to get your channels on as quickly as possible. Yeah, that's it. So once you do that, it becomes much easier. Without it, you're trading blind. Like, it's so hard to see what is going on without channel lines. You're basically trading support and resistance. That's the whole name of the game. And if you can't see the support and resistance, how do you know where the good entries are? You don't. So you got to practice getting your channels on as quickly as possible. That's it. Thanks. Daily Intraday Review is proudly brought to you by our Visual Trade Journal. It's software for price action traders. It's a visual trade journal, meaning you can drag and drop right on your chart, rate your outcomes, rate your predictions, all on the chart. It's different than anything that's out there. Come and check us out at intradayreview.com.